Charles Gow, welcome to the Financial Freedom Fast podcast. What is going on, brother?
Hey, thanks for having me.
Of course, man. Of course. We were just talking a little bit about you going to Africa one and then cutting your trip a little bit short because you have a speaking engagement coming up, man. Off the bat, what's the Africa trip, man? Where are you going out there? What are you doing?
Yeah, I've always been a diligent planner. So I actually came up with this plan when I was 20s, before I was even married, didn't even have kids. But I foresaw that there was a good chance that I would have a family. And what my plan was, I was do a lot of international travel now, and then all the national parks, all that stuff. I'll do that when the kids are little. We'll do a big national park tour, and then when the kids are older, we'll resume our international travel again. So
Mm.
I actually lived that 10, 15-year plan out pretty well. We chose Africa mainly because my boys are very immature. If I took them to like Italy and they saw these statues, they would be like, oh, why is that guy's penis sticking out? Or what's up with all these spoons and forks? Like, why are we looking at wooden forks? As a result, I was like, they don't appreciate culture quite the way I'd like them to. So as a result, we chose Africa because I figured they could appreciate like animals running around on a safari. So this is our first big international trip as a family.
Dude, that's gonna be so awesome, man. You guys are doing this safari thing. They're gonna get to see lions and tigers out there. What do they got out there?
Yeah, I got a private tour that's booked everything out, and then I'm pretty excited about that. And then my only thing is that I probably want to get some rehearsal and time in there because that speaking engagement. But overall, I feel pretty confident. It's material, obviously, that I do on a daily basis. So talking about it shouldn't be too bad.
Yeah, so what do you do on a daily basis? That's a good transition. What are you talking about at this speaking engagement? Why are you the man that can be able to talk about it, and what qualifies you to be able to do that?
To answer that question, I try to take the context of the person that is asking the question because if it's a typical W 2 employee asking that question, if I explain it to them that like I climb a lot and then I do a self storage development here and there, most of the time they think I'm just bumming and they think really that, okay, he's just unemployed. But then for entrepreneur, when I talk to them, they understand, and typically they understand that I've worked really hard to build systems in place where I don't have to work 15 to 20 hours a week. So primarily my biggest jam is self-storage. I do a lot of self-storage development, consulting, raising capital, and even building construction management. I do
Mhm.
have a pretty diverse rental portfolio of industrial, multifamily, mobile home parks as well, assisted living. But I would say really what I'm known for and what most people I've seen my social media is it's centered around self-storage and self-storage development.
You're a self-storage guy, self-storage development, and with this entrepreneurial path that you've taken, you mentioned that you're a pretty diligent planner, even when it comes to planning out your vacations and the plan with your kids. Has that played into your entrepreneurial success at all? Being able to plan things out and kind of map out what you want things to look like?
Oh, for sure. It's a dual-edged sword because there's times where I'm too involved in the business when I should be getting myself out or outsourcing it. To this day, I would say the majority of the tasks I outsource in my business are tasks I've actually learned or implemented. At the very beginning, I literally was staff of one. So taking phone calls, the actual management, underwriting the deal, getting the financing together, guaranteeing the loan. I pretty
Mm.
much was the be all for everything. That has changed significantly. Now I'm the face of the company, but there's a lot of things I don't actually do the feasibility studies, but I will look over them. Now,
Mm.
some things when it comes to like, for example, site planning, that stuff does get a little bit advanced. I'm very hands on then. But
Mm.
my investors I have, I think a lot of them appreciate that. And they appreciate that I'm probably different than a typical guy. Like right now, I know I don't look like I'm dressed up, but this is probably the most clothes on I've had all day. Most of the day I was wearing pajamas or boxers, and then I had infrared light to my right.
And I think that is people think like this guy makes a ton of money, he does all these investments, he's got all this stuff going on, he's got to be professional all the time. I bet he's wearing suits when he's going out. No, like you literally just said, you're working probably I don't know, a quarter of the time, half the time out of sweatpants or pajamas, whatever you're doing, man, and keeping it relaxed. How has being in coming into a lot of the success that you've had, has it changed the way that your life operates?
Yeah, don't get me wrong. I wasn't acting like this at the beginning. When I meet with a multimillionaire investor or something like that, I don't suit up, that's for sure, because that's really not the type of client I'm really, but I definitely will dress up, wear loafers, a polo, that kind of thing. But I got very familiar with the type of client I identify with. They're not really looking at that guy that's a desktop guy, really good at analysis, wears a suit, has a high. To be honest, a lot of the clients I worked with and a lot of the self storage owners that we managed for at the beginning were mom and pop. They wore Dickies to work, overalls. They drink Budweiser, like that
Hmm.
millionaire next door kind of mindset. I got very comfortable dealing with that kind of client, to be honest, because they were basically a carbon copy of my dad, essentially. And flash forward to today, when I deal with investors, a lot of my investors are like really low key guys. They're nowhere on social media. They drive a used car or they buy a brand new car and drive it for 20 years. They're a lot like myself. And the more comfortable I got with what I'm looking for in my personality, the more I was able to basically communicate to my investors and the more I was able to focus on just what I do best. So there's areas of my business that I've outsourced out to my partners. So the guy that you typically see within my business that is the one that everybody's like in the brand or the money guy is really that person for my company. So while I am basically doing a lot of the stuff behind the scenes, Brian, my partner, serves that role. And then I have another partner on another side of our business that does that too as well. I just felt that what part of the business do I dislike the most? It's the capital raise portion of it, even though I still do it from time to time.
Mm.
What part of the business do I like the most? I like dealing with building construction management. I like dealing with other contractors and licensed builders like myself. So I decided to spend most of my time with the people I enjoy working with the most.
And how did you find your partner?
I actually was on an interview on his podcast actually. And it's funny because like when I met him, I had heard his voice on this podcast for 2 years. And he actually doesn't know this. Maybe I will let him listen to this podcast. But I thought he was like friendly giant type of character. I pictured him with glasses and just being like a bigger guy, blonde hair. And
Right?
he's like the exact opposite. He has very little hair. He's average size and doesn't have glasses. So he's the exact opposite. But we just kept in touch after that. We'd always talk about different deals that we're doing. And then over the course of the time, if you ever have a deal that you're looking at that you don't want to fund or you need somebody to look at it, let me know. And so I took him a deal that actually was a different self storage facility. And he actually kiboshed the deal, which that was a really big mistake because that deal actually a few months later appraised for over $1 million more than what we had under contract for. And essentially what happened was I found another deal, but then the second deal, I was a lot more adamant on like, hey, like this is a good deal. Like you need to take a closer look. And so I gave him more pushback on it. And
Right.
then he said yes. And then oddly enough, towards the end, we had a little bit of hiccup. And then I was thinking about backing out. And then he was like, no, we need to move forward. And then that deal turned out to be a return for our investors. It would have been triple digits within a year. And
Wow.
then we could move forward from there. So we did another deal since then. And then we've done a combination of both debt and equity raises for our deals that we've done recently.
Wow, man. And like some of those deals that you find, the ones that you back out of, I've had deals that I was in with a partner, we were under contract and we just jumped out. We got scared. We were like, there's got to be something there that's not right. And they appraised for way more. 2 months later, I missed out on a good deal, but those are all learning lessons that you can take into account. Like this taught you a lesson, and that next one you were able to go grab that and go get it. So I want to dig in. You're the self storage guy here. I want to dig in on self storage today. If someone has no idea and they are clueless to self storage, how do you start? And let's start with the analysis side, the numbers. What are things that you need to look for on a self-storage deal, let's call it, something that you would call a deal.
To simplify this, because I'm in so many different asset classes that they really all the underwriting they do translate over very well. You have three pillars of what you need to invest in real estate in general. It doesn't matter if it's self storage or multifamily or whatever. And to
Mm,
simplify it, it really comes down to time, capital, and knowledge. And in most cases, you have a person that has one of those three. In my cases, when I deal with clients, or typically they have a lot of capital, they have a lot of money, but they don't have the knowledge or they don't have the time because let's say they have a really high W-2 job or they have another business they're making a lot of money and they don't want to go from that.
right,
So now obviously from there then we help with basically time and knowledge, because what we do is that they pay us a sum of money that allows them to close that gap on their knowledge or on their time. So that way, if I charge $1,000 an hour or more, and somebody's making $10,000 an hour, all they gotta do is basically spend 10 minutes on this. And if
right,
I can basically shorten that learning curve for them to a certain multiple of that, then I've made them their money back. And so on the analysis side, typically how it breaks down especially when we do consulting, is it typically breaks down around feasibility, where we do a feasibility study for somebody, or we teach them how to do a feasibility study. When we
right,
do a feasibility study for them, it's typically because they already have a site in mind, they already own it, and they want to make sure the site works. If
right,
it's something that tells me they want to go all in on self storage, so let's say they own a facility already, maybe they have a really big building background, so they know how to build self storage, but they don't know any of the other stuff. Then we
right,
actually kind of do a course where we teach them or their staff how to do a feasibility study at three levels. One is like a quick 5 minute one, which is kind of, hey, this is how you quickly underwrite it so you don't waste everybody's time going deep. Another one is more of like a 1 hour that kind of goes into unit sizes and whatnot. And then we show you how to do a full blown one, which takes about 4 hours to do. And that full blown one is when you're doing it because it's a good site, but you need to have all the information ready to turn around and give it to the bank. So
right,
that's one area. And then the second one that we most commonly do with getting people started is site planning. So going back, I use that 1,000 hour because on average, our consulting costs between 1,000 and 1,800 an hour, which typically gives people a lot of shell shock because they're like, well, you're not worth that. I'm like, doesn't matter what I'm worth. It matters what I think I'm worth. And I won't do it for any less. But
right.
on the site planning side, you can easily pay engineer $300 or $500 an hour to basically build a site plan. So it's very quick before they've already burned through what I would charge you to do it. Your typical person will say, hey, Matt, I want as much storage I can get to the site. It's 4 acres. Go ahead and just do it for me. And
Right,
it's okay, cool. You need to give me parameters. What are you going to be storage? Are you storing boats? Because boats need wider driveways. What size buildings should I be working with? Because 20-foot wide buildings are way more expensive than 40-foot wide buildings. And
right,
so what most people do then is that they get their first edit from the engineer. Engineers spend about a month or two on it. And then what happens is they're like, oh shoot, I just talked with the steel guy, and the steel guy actually said that this layout you just gave me is super expensive. So then you waste the steel guy's time because they say you got to do it all over. Then you got to go back to the engineer. Engineer's back to the drawing board for 1 or 2 months. And then now
right,
you got to basically have some information. So what we do is we know what the steel guy is going to say. We know the contractor, the concrete guy is going to say. We know what the excavator is going to say because we understand soil samples. And so what
right,
we do is we combine all those things and say, okay, this is the layout. You're going to go to the engineer, have them do this layout, get them their drainage plan, their shoveling and plowing, was it green space, all that combined. And then they get it all in the whole shot and they're done in 4 to 6 hours versus spending all this time trying to tinker around and figure out what you want. So those
right.
are the two areas where we generally start when we basically are working with either a client or whether we're just doing it for ourselves in house.
That makes sense. Now, for someone who is like brand new, they wouldn't be able to afford, like, literally, they have no assets right now, none to
Yep.
their name. They're making $70,000 a year, but they want to get in. They want the knowledge, right? They want to be able to underwrite these deals so they have the time and the knowledge, hopefully, from what we're about to hear, and then they can find the capital after that to go and buy these deals. If somebody wants to buy an already built storage facility, what type of numbers are you looking at as a like we want to buy undervalued assets,
Oh,
something that's 75% of what it's going to be worth after we stabilize it, or at least 70%, 75%, so we can refinance, pull our cash out. What do we need to look at when if we're brand new to self storage? What are these metrics, numbers, data on the units
yeah,
that
I
we have
mean,
to look at?
it's really hard because my company, we don't work off of rules of thumb. We're not working off of like spreadsheets that basically we just implement and whatnot. We're using basically
Right,
off our actual historical financials. So that's significantly different. But if you wanted to get rules of thumb or kind of industry guidelines, you have Inside Self Storage, which I'm speaking at, so I'm going to plug them for sure.
right,
SSA, Self Storage Association, and then you have your Self Storage Almanac, which is that's a great tool because appraisers often use it too as well. And then that will give you national trends. But I would say those are the best areas to start. Honestly, when people come to me and say, hey, where I get started, one, it depends on what you tell me. Because if you tell me you make me $30 an hour, then I'm
right.
like, you gotta just jump on it. Go on as many podcasts you can go that are self-storage, absorb all that, read as many books, do as much stuff as you can cheaply, and
Hmm.
try to get it to a point now where you have a baseline understanding. Because like the one of the things that I noticed when I first started out is that I stayed in the small self-storage space, like sub 1 million for a very long time. And it was great because I felt kind of like I was a shark in the water there because I had way more experience than other buyers. I had a competitive edge where it's like, so that schmuck over there basically has no experience in self storage. They don't have their financing tied down. And you basically want to compare their offer to mine. I'm like, hey, that's not a really ideal because you close, you know what I'm talking about. I got finance in a range and I'll underwrite this quick.
Right,
Now, as we've gone to deals over $10 million, now I'm competing with funds that are very large. And so now they have economies of scale of large funds that back them, even though we do too as well. They've done multiple transactions with these brokers that have 10 million plus. So
right,
really, I think it's awareness of where you're at in the cycle, what you need to do to best basically accommodate those three pillars. Because if you told me that you're a doctor, you're making $500,000 a year, and you want to get into self storage because really, even if it doesn't make money, you're gonna make hundreds of $1,000s just off the tax savings because you're a doctor, which
right,
that's a true story. That's one of our clients actually. Then in that scenario, then I'm like, well, it makes sense then for you as a consultant because in the amount of time that you take to spend to learn all this stuff, you're going to lose tens of thousands of dollars when we can do it in hours or like days, not weeks, for you to basically get to where you need to be. So that's
right,
it's a reflection of this being reflective of that. Like I have people are constantly looking for mentors. And it's like, you got to realize that like you're not at a point to be constantly like sort of mentors because you have to provide value to your mentor. And there's only
right,
really ways you can provide value for your mentor. Find them a deal, which means that you need to get on the deal flow train and try to find deals, bang the call as much as possible, or you need to pay the mentor because then they're compensated. So when they're
right,
starting out brand new, it's got to be one of those two. When I started out, the biggest thing I provided value for is that I actually had spent years building experience for self storage facility owners. I had worked at a self storage facility. And then when it came time for me to basically manage on my own, I gave them deals that they flat out couldn't turn around. So let's say you have a small storage facility, rent rolls $8,000. I talk to you about it, and then I look over the rent roll. I'm like, when I look over this, I think you're 20% below market. I can get your rent roll to $10,000 within 2 to 3 months.
right,
So what I would do is I work backwards from that and said, okay, let's not think about what I think I'm worth. Let's think about what am I worth to this guy to a point where I can make him offer that he will accept my offer because what I really am valuing this deal at is the knowledge I'm going to get from managing the facility. So then when I
right,
work backwards from that, okay, let's do this. Let's charge him $6,000. I'm going to manage it for 3 months. And then on top of that, after I'm done at the end of the 6 months, we're going to have call center place. We're going to be implemented. Your renters are going to be trained properly on how to properly treat you as a storage owner, not Billy, my dad's soccer coach or whatnot. And then in 3 months after I've done taking over this facility, you've already made all the money back that I charged you. Nobody's going to turn that down. And so I just found a way to create value based off of what worked for me. And then
right,
from that point forward, I got clients and then I basically kept building up my book of business. Now, okay, now I've managed 4 facilities. Now I manage 5 facilities. So I'm going to somebody now and saying, hey, I want to buy a facility. Yes, it's my first, but I know this about storage. I can
Right.
I can manage this. I know all this well, and also I can provide value for other ways. And so ultimately, all that did for me was that I just kept building my CV. Now, where when I started consulting, for example, I was charging $50, $100 an hour. And if anybody paid it, I was super excited because I was building my book of business. But as I built my book of business up, look what happens to my consulting rate. It keeps going up. I know
Right.
that was a long-winded answer, but that's like how each person really is a unique scenario.
Yeah.
Actually,
And
no unique scenario that it's the you got to really look at what their specific scenario is.
and each person has a different definition of those 3 pillars, right? The time, capital, and knowledge. Although they're the same for everybody, the same things, everybody has different knowledge sets, everyone has different amounts of time, everybody has different amounts of money. If you have a lot of time and you don't have the knowledge or the capital, you can offer to, if you have 40 hours a week to go help somebody out, I'm sure you could get, let's say somebody's going and buying one of these facilities that's grossing 10 grand a month, right? If you can offer yourself at 40 hours a week and work for free for X number of months, I'm sure you could secure some portion of equity in that business. And then from there, you could, the next deal, you could get a little bit more equity and work for them. But each of these ways, even if you don't get any equity, you're just learning the ropes. You are putting in action and you're building that CV that's right and putting out there, look, I did this deal, I did this deal, I did this deal. Now, when it's time and you see that deal to buy, you can go to an investor, you can go to someone with money and say, look, I haven't bought any deals, but I managed this deal. I managed this deal. I managed this deal. This is how they all went. I am ready to do this on my own. I am looking for someone to put the capital down to go buy one of these things so I can go execute on it. Do you want to be the man that puts money down and puts it all on me? I guarantee you it'll go well. And maybe they say no, but you'll find the money if you find the deal and you bring it to them. Charlie, you switching gears here from self storage. I want to talk about this Airbnb I've seen on Facebook that you're doing
Yep.
up, man. Is this Florida? Where is that at?
Yeah, so Central Florida. The nice thing about it is that not every investment I do, it doesn't solely have to be the purposes to make a lot of effing money. And essentially, what happened was I had two short term, or not short terms, two regular like small multifamily rentals. I had it from when I first started investing. And I just wasn't paying attention to it because you look at, I got this duplex here, or I got this multi-million dollar self storage facility there. Does it make sense for me to spend 2 hours on that or two
Right.
hours on this? And so they just got neglected after a while. I had a ton of equity. So I 1030 them one into this property where I utilize it like 4 to 5 weeks a year, which is like a $50,000 savings, not having to rent something down in Florida. But
Right.
it's been a lot of fun because I'm spending about 80 grand to Disney theme them out. So we're doing Avatar, Tangled, or Rapunzel, and then we're also doing Star Wars. And then learning, I've actually been doing short term rentals for over 20 years too, as well, just not like hardcore part of the business. And so it's been a lot of fun. Like it's the kids are involved in it. It's nice dealing with contractors that know what they're doing because I'm paying for high-end murals, but it's been a lot of fun.
Dude, and I like that you can not, and I'm not saying now you can go do this. You've actually been able to hop around to a bunch of different asset classes throughout your entire career, but you've got the time, capital, knowledge, ability to go and do these different types of investments and have fun and do this stuff with your family and get them involved a little more in the business, man. I saw the picture of, I think it was, it were your daughters painting with you as well, or was that all just the painters there?
Oh no, that's all the painters actually. Like they just
Got it.
they got to work for 20 people like working on it getting done. So it's insane. They're the pace that they're going at and the progress, it's insane. I definitely couldn't have done it like in a year all the work that they've done. But they got a staff of like 12 to 14 people, four guys doing custom bunk beds, things like that. One person that handles like the light structures and things like that. Roughly, I'm spending like $20,000 a room where I got glow in the dark fiber optics, and then the
Right.
paint is also like glows under a black light. It's textured, and then I got custom bunk beds too as well, where so it looks like you're coming off a Rapunzel tower. It's been pretty nice, and it's also really visual appealing. Like sometimes, like especially when I had like low income multifamily, those weren't really exactly brag properties that you want to take mom and dad to. Sometimes it's nice that, oh hey, I got this nice property that like people want to rent it out, and it's also really cool for entertaining people when I'm down in Florida.
Yeah, I think so, man. Those are the types of properties that I do eventually want to move into myself as well. Still focused on those multifamily properties, but hey, every property that I get, man, I am so grateful for and building out the portfolio and proud of it, man. It's a blessing to be able to do this type of stuff. And especially, it's a blessing to have you on the podcast, man. And the main question that this episode, it's a Wednesday episode, it is about passive income, man. The fastest way to 10K. If you were starting from scratch right now in this market, making 70K, you don't own any assets right now, what would you say is the fastest way to get to $10,000 in passive income every month?
I think it goes back again. I hate to beat that old horse again, but it comes down to those three pillars, right? Because if you have a really high paying W 2 job, and I use an example, like for me, I had a job that was paying me not very well, and I didn't want to get out of the industry because I felt like investors, oh, I really want to move up within the company. But then I also want to do real estate as well. And the best thing I did was quit that job. I just got into a W 2 job that paid me like three times what I was making other job, and
Right.
yet I kept my living expenses the exact same. So I had six figures of income to basically just funnel. So I had lots of capital to
Mm.
funnel into my real estate business. And that's what really jump started, is because like I just used my unfair advantage was that like I have a lot of money just funnel into it. So I can just keep buying real estate and building up my cash flow that way. Now,
Mm.
obviously, if I was only making $15 an hour, then I would say then it's best to basically build value for somebody else whose time is worth a lot of value. And then basically eventually try to create so much value for them that maybe you can partner with them. So for me, one of the people that I used to work under as a free intern essentially is I went to this person. I'm like, I know that you mentioned a while ago that you have staff that's not very good at underwriting these deals, or they're not doing a good job. I want to be that guy for you. I want to create so much value for you that you're able to do that, and then I can help you grow. And then my eventual goal, which I don't remember if I said it to them at the time, but at a later point in time I did say it, was that if your company's going to grow by 12%, I want to help you grow your company by 30%, because later on, I want to actually be a part owner of this company because I see his vision. And I want to say, hey, I was directly responsible for growing this company 20% faster than you expected.
Mm.
Will you give me 20% of the company? And like, even with my staff now, that's what I want them to do. I want them to have ownership of the company, that like, we're going to grow by X amount. And I have no problem giving you part of the company if you can grow the company more than I expected to. Now, if we grow by 5% this year, whoop-de-doo. Well, I expect to do that on our own anyways, right? But if you create so much value that you can do that, can go ahead. And so for me, early on, when I was really early on, I was only making, 10, 15, $20 an hour. I basically leveraged my time to build value for others, which in turn gave me the knowledge, which I didn't have either. And then eventually,
Right.
then I had the knowledge, then I had the capital, and then now I was running short on time, but I already had a real estate portfolio built out. So I
Right.
would say that it comes down to leveraging you like those three things again, because the worst mistake I think somebody can make is they're making $15 an hour and they keep going to people like, hey, would you mentor me? Can I pick your brain? Can I pick your brain? And
Right.
then one, if I see that as a potential mentor, I'm like going to everybody to mentor. So one, that doesn't really stick out to me. But then two, it comes off as being lazy. Why don't you just sit down and listen to 10,000 podcast hours? That's what
Right.
I did. I listened to 30 hours of podcasts in a week at 1.5 times speed. So that's how I got through it so fast for
Mm.
almost a decade. What kind of education I get from that? I probably got more education from that than my bachelor's degree from. I'm not going to badmouth the school I went to, but that's how I felt.
Right.
That's how I would leverage that. Is that you can leverage to get to that $10,000 a month? That's what you should leverage, and that's typically is whatever you have the most of those three pillars.
I love that. If you have the time, go to someone that is doing these things that you want to do, and maybe they're way past where you want to be. Maybe they're making $100,000 a month, But if you go to someone making $100,000 a month passive and you say to them, I want to give you all my time, I want to try and add so much value to your business. And if you can get a portion of that added, man, one, you're going to learn so much, but two, if you could get a portion of that, you're going to be well on your way to 10K a month. Charlie, what is one actionable step our listeners should take today to start on their path towards financial freedom?
Definitely take action. And by take action, I don't mean, oh, go reach out to people, find mentors. It's really about basically filling that gap that you have, whether it's knowledge, whether it's finding capital, whether it's reaching out to people. But I think people try to jump the gun where they're so impatient that they're trying to
Mm,
jump from 0 to 10,000. You don't need to make $10,000 a month on your first deal. You can
right.
only make $100 a month on your first deal. But to be honest, the amount of knowledge you get from doing a deal that only makes $100 a month is going to fast forward you to $10,000 a month even faster. So that
Right.
would be the biggest thing I would say is just take action.
Man, I think action is take one step. Find out what the steps are to get there. And even if it's a small step, take one step and that'll get you one step closer to where you need to be. And then take the next step. Maybe the next step is bigger. Things start compounding, things start moving, and we start getting closer to our goals. Last question, Charlie. What's one question that you wish I would have asked or a topic that you wish I would have covered? And how would you have answered that question, or how would you have expanded on that topic?
So one of my struggles that I have is that because I'm only working about 15 to 20 hours a week, I get a lot more people reaching out to me for a request for mentorship or, hey, I want to pick your brain. And
Mm,
in theory, I technically do have the time, but I didn't work 50, 60, 70 hours a week for as long as I did. So that way, then I have 25 hours available to mentorship. So I'm really big on hoarding my time. My time is meant for the things I want to do. And yes, I do want to give back, but I don't want to do it 15 hours a week. So I have 2 hours a week that I set aside to let people do whatever they want. And the question I think would be asked is if somebody's looking for a mentor, how should they go about it? And whenever I give advice on it, like I said, value them at their time. Then now I have people offer me to pay me money at my time. Listen, I don't want to charge you $1,000 an hour because it's not worth it.
right.
Go above and beyond what you think you need to do. A lot of people are just trying to do the bare minimum. Okay, let me buy you lunch and let me like try to help you
Right.
out. Let's take it one step. Hey, I just posted on social media that like I've had difficulty picking up or taking my dad to and from his assisted living facilities rides. Hey, can I jump in and help your dad with those rides? Because it has nothing to do with real estate, but it's helping you. If you
Right.
go above and beyond in helping people that you are trying to grab as a mentor, not even with, okay, I'm going to do this so that way you can spend an hour with me, but you just go
Right.
above and beyond and help them, that will grab you a mentor. I had a guy that helped me move, and I said I'd give him like some time to talk about real estate. He only took 10 minutes of my time, but then a year and a half later, he told me like that 10-minute conversation, the impact it had on his life. And the thing that's crazy about it is I want to help this guy. I'll go out of my way to help him because I see the
Mhm.
progress that he made. I see what the mentorship I provided him, what it did for him, how it actually impacted him when the majority of people just do nothing. And that's the type of person I want to mentor. So think about it that way because, like, I'm sure that you have a lot of guests that get hundreds of inquiries. I get 40 or 50 inquiries from people from wanting to mentor me. And you got to understand the majority of the time you're saying the exact same thing. If you've heard it on a podcast that thousands of other people are doing it, they're probably doing the exact same thing. So you got to take it one
Mhm.
step beyond.
Yeah, man. You got to be different. You got to find a way to make yourself stick out. And like, maybe you're not even doing this stuff with the expectation of, oh, I'm going to get a mentor. Maybe you just want to be surrounded by these types of people and you're way willing to help them do whatever they need help with just to even be around them. So I think it's great. Find a creative way to help them. Or even if you bring them a deal, everyone always likes to see a deal. If it's good, find a way to stick out. So last question we've got, where can my listeners and watchers find you, follow you online?
Easiest way is Instagram at Charles C and then KAO, which is my last name. And then obviously the most, if they're looking for great content about self storage and kind of going from there. If you have a question, all of our videos come from requests from people that are trying to learn more about self storage because we don't want to help just one person. We want to help a lot of people. So if you comment there, a lot of people like it. Chances are it's going to get turned into a video. And that would be
Right.
YouTube at .com at Twin Oaks Capital. So
Twin
at Twin
Oaks.
Oaks Capital on YouTube, and you'll find it.
Cool. Hey, man, Charlie, Charles, we appreciate having you on today, man. From the Financial Freedom Fast podcast, we are signing off, and this is Charles Gow.